Welcome to House Lux Estate, the premium channel where we dissect interesting concepts revolving around the financial world. We're dedicated to unraveling the mysteries of finance, providing insights into market trends, and offering a fresh perspective on investment strategies. Our mission is to enlighten, educate, and empower you to make informed financial decisions. So whether you're a seasoned investor or just starting out, there's something here for everyone. Today, we delve into a fascinating phenomenon known as herd mentality and its influence on the stock market. Stay tuned. To fully grasp the impact of herd mentality on the stock market, we must first understand what it means. Herd mentality, often referred to as mob mentality or pack mentality, is a psychological phenomenon where individuals adopt behaviors, buy items, or follow trends because many other people are doing the same. It's a survival instinct, deeply rooted in our evolution as social beings. Imagine you're at a concert and everyone around you starts to run. Even without knowing the reason, your first instinct would be to run too, right? That's herd mentality in action. Or consider how trends spread like wildfire on social media platforms. One person starts a new dance challenge and before you know it, it's all over your feed with everyone trying to replicate it. That's also herd mentality. Why are we so prone to this behavior? Well, psychologists believe it's a mixture of our instinctual need to belong and our fear of missing out. We're social creatures wired to seek safety in numbers. In the wild, straying from the herd could mean danger, even death. So we've evolved to stick with the group, even when the group may not be making the best decisions. Moreover, our brains are hardwired to take shortcuts. It's much easier to follow the crowd than to analyze every single decision independently. When we see others doing something, we assume they've done the legwork. They've assessed the risk, and they've deemed it safe or beneficial. It's a cognitive shortcut that saves us time and energy, but it can also lead us astray, especially when it comes to financial decisions. Investing and trading are complex activities that require careful thought, analysis, and decision-making. But when herd mentality kicks in, investors can often throw caution to the wind, following trends without fully understanding them, leading to inflated bubbles and eventual crashes. Now that we understand herd mentality, let's explore how it influences the stock market. Herd mentality is a powerful force in the financial markets. But how exactly does it work? Imagine you're on a savanna and suddenly one gazelle starts to run. Soon, the entire herd is sprinting, even though most of them have no idea why they're running. The same phenomenon happens in the stock market. When investors driven by fear or greed start to buy or sell stocks in large volumes, it can trigger a similar behavior in others. This is herd mentality in action. It's the psychological tendency for individuals to follow the group, often overriding their own analysis or judgment. To understand this better, let's revisit some historical events. Take the dot-com bubble of the late 90s, for instance. There was a frenzy to invest in anything and everything related to the internet, regardless of the company's profitability or even a clear business model. People were buying stocks simply because everyone else was doing it. But when the bubble burst, many investors suffered significant losses. Similarly, during the 2008 financial crisis, we saw herd mentality trigger a massive sell-off. Fear and uncertainty led investors to dump their shares, causing stock prices to plummet. Again, many were selling not because of careful analysis, but because they saw others doing the same. So what's the takeaway here? Well, herd mentality can significantly sway the stock market. It can inflate stock prices far beyond their true value, creating an asset bubble. Similarly, it can trigger panic selling, causing prices to drop sharply. As we can see, herd mentality can significantly disrupt the natural flow of the market. So the next time you're about to make an investment decision, take a moment to pause. Are you acting on careful analysis and sound judgment? Or are you simply following the herd? Remember, the stock market is not a sprint, it's a marathon. And in this race, the thoughtful, patient investor often comes out on top. As we can see, herd mentality can significantly disrupt the natural flow of the market. The influence of herd mentality on the stock market isn't just theoretical, it can lead to serious consequences. From the bustling streets of Wall Street to the quiet desks of home traders, the effects of herd mentality can ripple through the financial world with alarming speed and potency. Firstly, let's consider market crashes. These catastrophic events can be triggered by a collective panic, a mass exodus of investors all heading for the exit at once. It's like a stampede, where one scared animal triggers a whole group to start running. And in the stock market, when everyone starts selling, prices plummet. The crash of 1929, the dot-com bubble bursting, the financial crisis of 2008, These are all stark examples of how herd mentality can lead to market crashes. But it's not just about the big crashes. Herd mentality can also lead to significant financial losses on an individual level. If you're always following the crowd, you're likely buying high when everyone else is buying and selling low when everyone else is selling. This is the exact opposite of the tried and true investing wisdom. Buy low, sell high. Moreover, the herd mentality can foster economic instability. When investors move together as a herd, they can create and burst economic bubbles, causing fluctuations in the economy. These ups and downs can lead to economic uncertainty and can even impact job markets, consumer spending, and overall economic health. However, it's important to remember that not all herd behavior is negative. There can be wisdom in the crowd, and sometimes following the herd can lead to profitable opportunities. But the key is understanding when to follow and when to break away from the crowd. So the consequences of herd mentality in the stock market are far-reaching, impacting not just individual investors but the entire economy. It's a powerful force, but like all forces, it can be both beneficial and destructive. The challenge for investors is to understand when the herd is moving in the right direction and when it's time to step aside and forge your own path. Herd mentality can be harmful, but there are ways to navigate it. In the next scene, we'll explore some strategies for navigating the herd mentality in the stock market. So, how can you navigate the stock market without falling prey to herd mentality? It's a question that's been asked time and time again. And while there's no one-size-fits-all answer, there are some tried and true strategies that can help you stay on course. First and foremost, you must do your due diligence. This means conducting thorough research into the companies you're considering investing in. Look at their financial health, their management team, their business model, and their competitive landscape. Don't just rely on what others are saying or doing. Make sure you have a solid understanding of the business and its prospects before you put your money in. Secondly, stay informed. Keep up to date with the latest news and trends in the market. This doesn't mean you should react to every piece of news that comes out. Instead, use this information to inform your decisions and help you see the bigger picture. Remember, the stock market is a complex, dynamic system. It's not just about what's happening today, but also about what might happen tomorrow. Another key strategy is to not let your emotions take control. It's easy to get caught up in the fear or greed that often fuels the herd. But making decisions based on these emotions can lead to costly mistakes. Instead, try to maintain a level-headed approach. Consider the facts, weigh your options, and make a calculated decision. Finally, develop your own investment strategy. There's no one right way to invest. Different strategies work for different people. It's about finding what works for you and sticking to it. This might involve investing in a diversified portfolio, setting clear investment goals, or adopting a long-term investment horizon. Whatever your strategy, make sure it's one you're comfortable with and that aligns with your financial goals. By staying informed and making calculated decisions, you can navigate the stock market effectively. So, don't be swayed by the herd. Forge your own path, and remember, the journey to successful investing is a marathon, not a sprint. Herd mentality is a fascinating concept that has profound implications for the stock market. We've journeyed together through the intricate labyrinth of herd mentality, dissecting its role in the stock market. We've unearthed insights into how this psychological phenomenon, deeply rooted in our primal instincts, influences investor behavior and can trigger stock market fluctuations. We delved into the essence of herd mentality, shedding light on its fundamental nature, the tendency for individuals to mimic the actions of a larger group, whether those actions are rational or irrational. We then navigated the turbulent seas of the stock market, discerning how herd mentality can lead to speculative bubbles and subsequent crashes. A crucial understanding for anyone venturing into stock market investment. We explored the consequences of herd mentality, from the devastating financial losses to the ripple effects on the global economy. The 2008 financial crisis served as a potent reminder of the destructive power of unchecked herd behavior. But it's not all doom and gloom. We also discussed strategies to navigate the treacherous waters of herd mentality in investing. Cultivating independent thought, thorough research, and emotional discipline can help investors steer clear of the herd and make informed decisions. In a nutshell, understanding herd mentality is not just about comprehending its role in the stock market. It's about equipping ourselves with the knowledge to make better investment decisions and safeguard our financial futures. Thank you for joining us on House Lux Estate. If you found this video helpful, don't forget to subscribe to our channel for more insightful content. Until next time, stay informed and invest wisely.